always. And in today's live stream, we're going to be talking about the future of XRP finance that is on the Flare network and hopefully coming very soon through the F Asset protocol, which I believe to be launching this month. Time will tell, but we're going to listen in here to this live stream. So this live stream is going to be hosted by none other than Firelight, the hottest new dApp that will be launching in the very near future in conjunction with a SparkDEX AI. So they say that they're hosting an upcoming X Space, what we're going to be listening to in about 5 minutes time. So if you are listening at a later date, you may want to just skip ahead 5 minutes before we do the introductions and go over some preliminary knowledge base to get a foundational understanding about what Firelight is and what's expected. So they're sitting down with Flare and SparkDEX to uncover some of the hottest opportunities in decentralized finance. Again, this is starting in just under 5 minutes, and this is what we're going to be listening to. Speaking of opportunities, we did just launch yesterday, or 14 hours ago here, the Flare Community MasterMind group. So if you are interested in trying to find the best opportunities to earn yield on the Flare network, check the link in the description. It's one of the benefits that you get as a Patreon member, in addition to many other benefits too. We're going to be starting this once FXRP goes live and these opportunities start coming, because there's going to be a lot of them. We're going to be spoiled for choice because FXRP is going to be utilized in many different dApps and, you know, all of the decentralized exchanges. And I do have a little bit of alpha here for you. Keep your eyes on the Enosis account, because there is an announcement that is coming out in the next couple of hours. Something that I'm very excited for, something that you can do with XRP that you cannot do anywhere else just yet. So stay tuned for that. Right, what is SparkDEX? I'm sure you guys know it already. It is a decentralized exchange, concentrated liquidity, so a Uniswap, a V3 model. And yeah, you can, or you could trade perps or perpetual contracts, but that's not the case anymore. It's just a decentralized exchange where you can swap, you can farm, also known as providing liquidity. And they also have staking for their native token. They offer RFLR rewards too, all of that good stuff that you can expect. But I think the biggest thing that we are looking forward to, or at least from me, is Firelight. This is going to be the staking XRP platform brought to you by Centaura and the Flare team. And yes, that's hopefully coming shortly after the launch of the F Asset protocol. So what we can do here is we go on to this Masari report. I always find myself coming back to this, and I think it's a great document highlighting how some of these things works. So of course we have the F Asset protocol that is going to be launching in the very near future onto the Flare network. And just to give you a quick overview, you've got the XRP ledger here. This is where XRP is. You can mint it to the Flare network, and this comes through the F Asset protocol and ends in your wallet as FXRP, Flare XRP. Of course, you can go all the way back through and redeem it in the, I guess, the reverse process. Something that I want to really talk about here is this, the STXRP architecture. So STXRP is staked XRP. And basically, you have this XRP ledger side here. This is the XRP ledger, and here is the Flare network. So obviously, the XRP ledger has many things going on, but what would happen is you as a user, as a holder of XRP, you deposit your XRP into the F Asset system. Now, we won't get into the complexities of that just now, but let's just say that you mint your XRP using the F Asset, and then you receive FXRP. Now, you know, you need to have a solid reason of why you want to bridge FXRP, or why you want to bridge XRP onto the Flare network. You know, there's no point in bringing XRP over if you don't plan to use it, right? Now, that may be you want to earn yield, you might want to participate in certain dApps, you may want to get a share of the reward flow that is likely going to be emitted to try and bring value and more liquidity to the Flare network. So, you've got your XRP, you interact with the F Assets protocol, and it gives you FXRP on the Flare network. From here, you can create staked XRP through the Firelight platform. You can deposit or stake your XRP, your FXRP, and it goes into the Firelight liquid staking token contract. This is where you get staked XRP. So you go from XRP to FXRP to staked XRP. And from here, this is going to unlock an abundance of opportunities where you can secure or you can participate in secured service networks. That's basically what Firelight is going to be doing. But you can also use it to earn yields and provide liquidity. You can use it in lending platforms and also decentralized exchanges if you want to trade it there as well. Of course, you can do all of this with FXRP, as you can see here. But in order to benefit from secured service networks, SSNs, you will need to own staked XRP. And this actually accrues in real time, so you'll be getting Firelight points, and you'll also be able to use it in these as well. So it's an additional benefit. Right, what time are we on? It's on the hour, which means that this should have started. I'll just give it a quick refresh. Of course, as always, I'm going to be reducing the volume on my mic, and we're just going to listen in, hang about in the chat, and have a bit of a discussion here and see what they have to say. So we're going to listen in now. I'm going to turn off the microphone unless they're still doing all the introductions, but yeah, let's listen in and see what they have to say. Right, guys, as you can probably hear, they are just playing music at the minute. I'm assuming they're waiting for the room to fill up. 60 people in the space already, which is pretty nice. You can just chill out for a little bit and wait till they get the show on the road. Got Jack here. Let's see who's participating. Okay. Yeah, we're just waiting for the room to fill up. I guess that's the thing with these spaces, they start on time, but I think they should start it 5 minutes early, just to go through all of this so it actually starts, the content starts when scheduled, right? So we're just waiting waiting for room to fill up, the guests to get onto the stage so they can speak. We'll just hang about for now. Again, guys, if you haven't already, please feel free to like and subscribe. I'm going to be producing content for a very long time surrounding Flare, and I think we are on the cusp of something great with F assets launching and Firelight launching. As I said before, there's going to be a lot of opportunities, and one of the exciting things for me is the fact that I think Flare are going to be heavily incentivizing the use of FXRP. Yeah, there's a lot of familiar faces here in the chat. Long-time OGs. Yeah, Mickey B Fresh and Patty XRP, they haven't seen them in a while. I think they quieted down since the token went down. I think it's pretty sad, but a lot of people, it's hard to get people who stay around through the good and the bad times, I've been producing content on a weekly basis since the channel launched. over 4 years ago, January 2021. And I think we're going to see a huge expansion of the Flare community as F Assets launch and onboards a whole new community. You know, I think initially we did have a... Oh, hold that thought.
Back to another banger show with Firelight today, unlocking XRP
Right.
opportunities. We're talking DeFi.
Let's listen in.
On Flare and beyond, and we've got some incredible guest speakers to dive into that conversation. We've got Thanos today, DeFi at Flare Networks. We've got Juan with us today, research at Centaura HQ, DeFi blockchains, quant stuff, distributed systems, AI, and cybersecurity. We've also got Alexius with us today, founder of SparkDEX. So basically just a stacked panel of guest speakers, all experts in this field that we are going to dive into this conversation with. For our listeners, let's get the likes out, let's get the retweets out, let's blow this space up, and thank you so much for joining us today. Thanos, I'll get the mic over to you to begin with here. How is it going? Are you excited for the show today?
Yeah, it's going well. Excited to be here. I love speaking with Juan and Alexei. They're people I work with work the closest with to build out our ecosystem. So happy to be here.
Awesome. And look, yeah, we've got tons and tons to get through today. DeFi yield, big conversation, tons of attention here at the moment. So cannot wait to dive in and hear what you guys are up to, what you're cooking. And yeah, look, it should be a really fun show. So if you haven't been on a show with myself before or with the Centaura team, then I'll give a quick rundown for our speakers of how we try and operate during the show, and then we'll just jump straight into the conversation. Essentially, we just go for organic conversation here. You guys are the thought leaders, you're industry experts, so I find the questions and where you take those questions is entirely best in your hands. Like, obviously, I can pepper you guys with questions all day, but it really is just talking about the trends, what you're witnessing right now, building in this industry that makes for the best content for our listeners today. So yeah, definitely want to make sure you guys feel really comfortable coming in with any questions that you might have. If you want to shape any questions around to the other speakers, asking or adding additional context for a speaker's take, and of course coming in on my questions. Now, how we do that with the question part, so we're not all speaking on top of each other or over each other, is the hand raise function. So there's a heart plus function bottom right hand corner of your screen. If you click on that, there's a hand raise function that I'm demoing for everyone on stage right now. Basically, get the hand up, I'll get the mic straight over to you. Really is that simple. Hopefully it'll be a fun show today. Also do a little gamification here. So we do have jack points. Now, jack points are the most worthless points in the entire crypto space, maybe even the world. But you do get jack points for every time you raise your hand in the air. At the end of the show, we'll see who contributed the most to the show today. And honestly, you won't win anything. Like, let's be clear. No utility. Please don't DM me for such. But if you do catch me IRL at Token or any other DeFi crypto events, then definitely will take you for a coffee or some lunch or a beer, whatever your poison of choice is. So that is it. Let's dive into the conversation. Juan, I'll get it over to you next here. I'd love you to set us up. Where do you feel the conversation is going to go today? DeFi yield, on Flare and beyond.
Yeah, hi Jack. Hi everyone. Super happy to be here chatting about DeFi on Flare today. I think in terms of the narrative for DeFi yields, there has been some, in my opinion, some shift in the past where we were seeing maybe in 2021, 2022, more speculative yields, very high APRs, with some tokens that were low market cap in many times. And now it seems that there is a shift more towards sustainable returns, in my opinion, that tends to be driven more by protocol revenue or trading activity, or right now with VR assets, right? So I think that this is a powerful concept of real yield that is starting to make a dent. So yeah, some places where we have seen this shift, in my opinion, are this conversion from points to native rewards. Of course, VR assets with the T-bill spaces returns. Perhaps as well, there has been a growth that has been massive. I think that nowadays, more than ever, there are people trading on chain instead of off chain. So yeah, I think that there are exciting times and things are changing for the better in DeFi.
Yeah, look, great way to start the show here, because you're completely right. I think we've seen a huge shift in the industry across the board. Honestly, crypto, DeFi, everywhere in between. You look at regulation shifts in some of the biggest countries on the planet at this point. The US obviously driving a lot of those changes as well. But you also look at the industry and the maturity within that industry, the people building here. Very, very different than even 2-3 years ago. Huge difference. And yeah, diving into exactly what those differences are and what people can expect if they join the industry now, and what they should expect as well. What they should be aware of in terms of what isn't best in class and what is these days, I think is going to be a really fun conversation that we'll have today. Alexi, I'll throw it over to you here. Which do you feel, when it comes to yield generating mechanisms like liquidity pools, lending, staking, or even restaking, are driving DeFi's growth right now, and which are losing relevance due to just the maturity and the risk side, in your opinion?
Hey, pleasure to be, guys. Thanks for having me. Great question. So, when it comes to relevance, I don't think any one of these particular areas, when it comes to DEXs, staking, lending markets, etc., are losing relevance. I think they're more upgrading. The maturity of the products themselves is growing into the needs of the space. So we've seen multiple upgrades happen when it comes to lending markets, making them more efficient. Now with the likes of Aave, Morpho, finding ways to utilize idle TVL in those lending pools to earn that additional yield. When it comes to DEXs, you've got multiple different variants of products now. Liquidity pool based DEXs, blob DEXs. Now we've seen the upgrade from Uni V2 to the concentrated style, the Uni V3 pools. So I don't think anyone is particularly losing relevance. I think they're just maturing, growing and adopting to the needs of the ecosystem and spaces now.
Yeah, look, great insight. And you're right. Like, none of those terms I have seen reduce in terms of on the timeline. It's still what people are looking for. It's still a major attraction point. It's just where it's all coming from, right? Like, especially when we do talk about liquidity, when we talk about lending, and also the yield side, like all of this is like, we're seeing institutions come in, we're seeing RWAs get mentioned when we talk about yield now. There's so many different avenues that the space is just quickly adopting, and the innovation here is honestly, the speed in which this is all going is crazy to see. Look, for our speakers as well, any questions I do throw over to any of you. If there's another speaker who wants to elaborate, if it's your particular area of interest, please do throw the hand up and feel free to do so at any point during the show. I guess when we do talk about that innovation, I think this is quite a broad question that a number of speakers might want to speak on. You have to start considering the role of AI and automation when it comes to DeFi, and when it comes to just the rate of expansion that we are seeing in this industry at this point. So, and Thanos, so maybe get the mic over to you first here, but other speakers feel free to chime in. How do you feel about the role of AI, especially when it comes to automation, derivatives, in terms of shaping strategies at this point? Do you feel like that is a conversation DeFi platforms and builders are having? Is like, how do we incorporate AI, and how do we use this to make these opportunities either greater or more stable? Or is it still a little early to, trust AI with something as important as finance?
Yeah, I think we're in the early days of using AI to craft strategies as they exist. I think for like basic everyday investing, it's like usually fine, but there are certain aspects of DeFi that I still wouldn't use AI for, but I think there is some potential. So when you have a Uniswap V3 DEX, you have the ability to have concentrated liquidity, right? But managing that concentrated liquidity with different factors over time is very difficult, right? Because you have to actively manage your liquidity that's in this specific pool. That's not really been true anywhere else in finance, but you could, in theory, use AI to help you move the concentrated liquidity as needed. I actually think Juan would be um, decently insightful on this, considering at Into the Block he works, or at Centaura he works there, helping people like manage their concentrated positions on on a Uniswap DEX.
Awesome. Juan, over to you. Would love to hear your experience on this one.
Yeah, totally agree with Thanos. Still early days, but it's super exciting, the things that can come up from this. So I think it's going to be key for the next evolution of DeFi for sure. Some ideas where it can aid for crafting new strategies, maybe. I think that one of the great capabilities that they have with AI is that you can easily aggregate massive data sets and draw insights very quickly from those. So I think this is a very symbiotic relationship with DeFi because all the data is accessible and since it's on chain. So it could be extremely powerful to combine data sets like yield data with other data sets, maybe more complex, like the evaluation of risk across certain protocols or assets. And combining these type of data sets together, we can maybe have a better understanding on which are the best risk-adjusted returns for many strategies at once. So I think that one of the direct applications that we could see in the near future will be with DeFi bots, which of course we are far from being completely autonomous. But I think that AI can aid for those operators to offer better risk-adjusted returns that are more adaptive, maybe in real time, that has less manual intervention and hence less error. So I know the applications are immense with AI, but this is one of the fronts where I'm more excited about.
No, that's super interesting to hear. One, can I ask you a follow up on that? Actually, since you're so deep into that space, I guess where are we in terms of time frame, in your opinion, from AI being more involved in? Do we expect every sort of DeFi entity to have some version of AI supporting their pools and supporting the returns and how that's all managed within like the next year or two? Or is it a little further away from that, in your opinion?
I think we're in the exploratory phase still. We have seen that some risk managers have started to integrate some of these models already and testing with those. I think that it's realistic to expect some of these applications on a 1 to 2 years time frame. Probably they are going to start small with applications that the one that Thanos mentioned to manage concentrated liquidity positions. That's something that could be an interesting use case that probably is not far off. But yeah, it's not easy at all, right? There are a lot of technical burdens on how to create these models. So yeah, I think that the industry is moving towards theirs little by little. It's just that it will take a bit of time to figure it out, which is the best tech stack to do these kind of things, and of course how everything is going to pan out in terms of the on-chain integrations, which are more deterministic, and those are smart contracts that needs to be set and not change much. So yeah, still things pending to be done, but yeah, I would say to keep the eyes open because I expect many of these protocols to start to integrate these capabilities.
Yeah, it's really interesting. Yeah, I have the privilege to share the stage with a couple of AI projects, that sort of crossover with crypto and DeFi at the moment. And it's one of those worlds where it just evolves so rapidly, as does the crypto space. But AI, we hear terms like general intelligence in terms of human intelligence is a year or two away, and the big restrictors there is more the energy that it's going to take rather than the innovation or the technical lift that's required. And I do think, with these things coming along, you do wonder, how long is it until AI at least has a base knowledge to operate in that field in a way that, yeah, maybe at least we can sleep more at night, because, crypto is 24/7. DeFi is no exception to that. And I guess, yeah, with that being in mind, we can put all of the procedures in place as we can to keep that risk off. But it would be much better if we had AI there in the background to just say, look, in this random scenario, if something happens that could impact my own holdings, then please, do X, Y, or Z, and it can sort of take it from there. I'm hoping that's a world that will come soon. Let's talk about the other side of the innovation, or at least the growth, which we have to talk about. Corporations coming in, institutional investments coming in. You know, you have your DATs, but you also have your ETFs, and you have, you know, obviously governments in the US and elsewhere who are really changing regulation when it comes to these points. I would love to know from the speakers on stage, is this all a positive even if you're retail, or is DeFi yield becoming increasingly more of an institutional offering, or is it still accessible to the average DeFi user? I guess is the big question. So Alexios, I think you may have had some issues there with the X basically booting you off the stage. So I repeat that just in case you didn't hear me, and I'd love to throw the mic over to you next. But is DeFi yield becoming increasingly professional to the point where it's focused purely on institutional offerings right now, or do you feel it's still accessible to the average DeFi user, even a retail DeFi user?
Yeah, that's a great question. Suppose I see the yield in the in DeFi in general in the space becoming yes, I'd say more professional. I'd say more competitive. At the same time, I would say that there's more opportunities present, and it's definitely still accessible to the average retail user. I think how it's becoming accessible to the average retail user is changing though. You may have institutions and professional services that are kind of breaking down certain complex DeFi strategies for the average user to access, whether that's through a vault or something. And these may be strategies that are, like I said, far too complex. The average retail user doesn't have the opportunities to necessarily execute. Maybe that's certain skill sets or certain strategies that can only be done at a certain scale. So I think it's definitely advancing. It is becoming more institutional in certain ways and more professionalized. But I think there's far more opportunities also present in the space at the moment. And I would still say, yes, it's definitely still accessible to the average DeFi retail user. And I'd say it's even more accessible these days with better product offerings, to be honest, as well.
Yeah, it's sort of best of both worlds, right? Like that's exactly what we want. We want institutions and the stability and the actual money coming in to to be there, but also you still want the opportunities where in the traditional world sometimes they seem to be behind closed doors, whether that be through like VC access, whether that be through some sort of investment fund that you can only access if you have X amount of money, or somewhere else in between. I think that's a really positive outlook. I hope that is the case moving forward. And yeah, I think you've just probably reassured myself and a couple of the audience that that might be the way.
Sometimes institutional players coming into the space, people may not like that, and there's definitely pros and cons to both. But I think at the moment it is a necessity, to kind of take the space to the next level, to be honest.
Yeah, of course. Yeah, look, at a certain point in time, you just need the liquidity, right? And that's something that institutions can really drive in droves. And we've got Juan with the hand raised during that take as well. So I'd love to see other speakers coming in on these questions. Juan, over to you.
Yeah, I think that Alexius touched on an important point that I really think that we are moving forward, which is this abstraction of complexity. Which I think that is happening mostly thanks to this whole vaults narrative, where we are seeing that there are almost in every chain vaults being launched that are aggregating complex DeFi strategies. So it's no question that the DeFi is professionalizing to some extent. There are institutional grade liquidity in many of these protocols, and the complexity of the strategies is increasing. Nowadays, I think that it's very common to see strategies that are mixing lending protocols, maybe with perpetuals as well. Yield markets with Pendle and Spectra are very, very common. And the fact that we have nowadays way better cross-chain capabilities is aiding massively to deploy this kind of strategies. So yeah, I would say that even with vaults, retail has an easy access to it. Still, power users or retail users that know a little bit more about DeFi, they still have access to very interesting strategies that can be performed on chain. So yeah, exciting times for sure.
Yeah, absolutely. And Alexi, you threw the hand up. I'll get it back over to you.
Yeah, just one other thing I'll add in, and again, it's a pro and a con. Honestly, long term, as long as it's done in a sensible manner, I would say it's a pro. is also, the different laws, the legislations that are being passed now with institutions coming into the space. Again, it's a pro and a con. It's one of those things that I think to an extent, and depending how it's done, and can we trust the government? So they're going to be reasonable and smart about it, and not just pass legislation that purely benefits large institutions. It can be done in a good way.
Yeah, look, we've all seen the reverse of that, right? You look at the US and Gensler, and it just not only was it unfair, but it didn't really align with like logic and how some of these assets worked. Just labeling everything a security that had any sort of digital footprint whatsoever. It was kind of crazy. So to see that step back and to see, certain entities now look at this on an individual basis and a nuanced basis, I think we're definitely moving in the right direction. But yeah, I do also feel that, that balance does need to be struck. And I just hope, we can keep it on the right foot so everyone's getting the same opportunities. But at least people can feel a little bit more secure in, actually building in this industry now without trying to do it the right way and then being caught sort of off guard by a probe for no reason whatsoever when you're actually communicating with the parties that are supposed to be there to give you guidance as opposed to just immediately tell you you're being illegal. Anyway, let's talk a little bit more about Flare here. We've got, obviously, Flare is in the title today. We're talking DeFi yield. And Thanos, I'll get this over to you for the first question, specifically around Flare. We've noticed the DeFi TVL has grown quite a lot in recent months. And I guess a big question around that is why? What do you think is driving that growth?
Yeah, so what is mostly driving that growth is stablecoin activity on our chain. So we've been mainly focused on stablecoins, bringing LPs in, working with a lot of the larger DeFi partners to onboard stables to Flare. The reason that we're doing that is I would assume FXRP launches decently soon here. And one of the key things that people will look for when trying to put on DeFi strategies is borrowing stables against FXRP. So people will likely deposit FXRP into a lending protocol, borrow stables, and then they can go buy stuff, go buy a house, maybe buy more XRP, right? This is not financial advice, but people can essentially curate the types of strategies and how they want to access leverage to their XRP. I would say at scale, this is one of the first times people can use their XRP in a trustless way by bridging it into Flare and borrowing against it, which I think is massive, right? There's a few different ways that you can use XRP today. CBXRP or like a few other different types of XRPs that are all held at custodians. Flare is kind of the first time where people can just bridge it in to Flare, borrow against it, buy more XRP, run delta neutral strategies if they want, deposit to vaults, or they can take it back to the XRPL whenever they like, right? So people can come and go, and it's really a like there's a lot of open areas to like how people want to try to earn yield on their XRP. I think that we obviously have lending protocols, DEXs, etc. There's intricate strategies that you can use to earn yield on your XRP that we plan on having specific curated vaults for users. So users that are new don't really understand like DeFi very closely can deposit to these vaults where curators will help them run strategies to earn yield on their XRP, right? So not only do you have all of the like Lego blocks of DeFi that exist on Flare to kind of sweat your XRP as much as you can, we also have the helping hand of curators as well that will be available for users that aren't as experienced.
Look, really interesting stuff here, and love that we have sort of this balance of explaining the overall sort of state of the market and where we are right now when it comes to DeFi, and then diving into the context with Flare in mind. So, look, great start to this conversation. Very much appreciate Juan, Thanos, and Alexi for your time today and really diving into this. And huge shout out to all the listeners who've tuned in as well. And I hope you guys are enjoying this one as much as I am. If you are enjoying the show and you do want to show some support for it, there's a really easy free way to do that, by the way. Just a like and a retweet of the spaces. We want to get as many people in here as possible to understand what is going on within this market right now and within this industry. So get them in here with a like and a retweet. Do follow the speakers up on stage as well if you are enjoying the specific context being provided here, because it really is going deep. And honestly, I think anyone interested in DeFi, especially around yield, should try and tune into this if they do feel they need that experience. Okay, let's keep this one going, and we'll go back a little bit. We'll talk a little bit more about Flare, and we'll just keep cycling through sort of the information and then how Flare are operating around that information. So the next question I have, really, and Juan, maybe you can come in first here. Can we talk a little bit about the challenges that are still facing this industry and maybe the evolution of the fixes to those challenges? You know, like I think even if we are still looking for a permanent fix to some of these issues, the maturity in the space has definitely brought it a long way. But for example, common risks that everyone will generally be concerned about: impermanent loss, liquidation, and hacks. Or even sort of clicking on links that they shouldn't themselves if it's not a hack. Can you talk to me a little bit about the growth there and how those risks can be mitigated today in comparison to previous years?
Yeah, I completely agree. It's still one of the friction points on DeFi, to correctly assess risk. Over these years at Central, we have been trying to assess risk as best as we can at many layers. Usually, it's not only something dependent on the strategies that you are deploying into for DeFi yields. Sometimes you have to take a high-level view and understand if there are any risks at the blockchain level, at the protocol level, maybe at the asset level, and understand which are the different key risks on each of those. Usually at Central, when we categorize risk, we put it into two main categories. The first one will be what we call technical, which is, what I mean by it is mostly smart contract hacks. So the good news on that front is that the occurrence of this has been decreasing a lot since the last 2 years, 3 years. They are happening way less often. The problem is that the severity of one of these hacks is quite high, since it can potentially drain a whole protocol, even though usually doesn't tend to be the case. So I think that we have grown a lot in the sector by some initiatives from some firms that are currently monitoring in real time some of the on-chain activity that happen over these smart contracts. And these firms, for example, have the capability to pause or freeze some of these smart contracts in case that there is any potential risk or any trial of hacking over these protocols. So I think we're doing better on the technical side. It still is important that users take a look at auditories that they deploy into protocols that have been audited before, that they are robust, they are solid, they have been going for some time with substantial capital. And to touch briefly on the other kind of risk that we usually look into is the economical risk, which is many of the things that you mentioned about, Jack, like impermanent loss, for example, or the chances that a lending protocol might have bad debt is another good example. So the good news on these ones is that they are not binary events that happen just from one time to the other. These are usually malfunctions that last over several, maybe can be days, sometimes can be hours. So I think that there is where users can try to put more effort into trying to understand better how these protocols work and which are the key risks that they might be exposed there.
Absolutely. Yeah, Alexi, great context there. I think another area is that high APR farm, the crazy yields that can sometimes be on offer in DeFi. Some a little bit safer. Obviously, I think one of the things that you highlighted there was just age of a project or a platform offering these opportunities and how long those opportunities have been on offer for as well. I think, fortunately, this isn't 2019, 2020 anymore. We're going to have years of context in the most part for some of these platforms. So if you do want to mitigate risks, you have that history a little bit more stabilized to win out there. But really interesting take, and love the context provided. Alexi, your hand came up there as well. Would love to hear your thoughts on this. Oh, Alexi, you there? I think it might have double muted you.
Can you hear me now?
Yeah.
Just one of the things I wanted to add in there is I think the education, right? So sure, there's the maturity around the markets and different products coming out, like monitoring products. But I think one of the key things we also saw from the early DeFi days is users understanding the products themselves better, especially when it comes to impermanent loss or liquidation. Maybe they've borrowed assets in the lending market and they're not managing the LTV ratios correctly. When it comes to impermanent loss with concentrated liquidity dexes, not understanding how to properly manage their ranges, or chasing 300 or 1,000% APRs, not understanding that if the token price goes down, all that APR that they're farming can essentially be worthless, and they could actually walk away in the negative. So it's just great to see the education across the board in the space come a long way as well.
Yeah, look, great take. And look, even a show like this, right? You've got 3 industry experts here all giving their takes on the space as it currently stands and, where DeFi is. Just hearing conversations like this, and honestly, just having that diverse exposure to the information, like no matter which way you are set up to learn in the crypto DeFi industry, whether you prefer newsletter articles, whether you prefer social media in text format, in short, or long form, like a podcast like this show. And also, by the way, people can hop up and ask questions on this show. So I think Spaces is a fantastic place for this sort of conversation. But yeah, all of those things have come a long way. And just getting time from people who are also spending 20 hours a day building, it is major. I don't think many other industries can boast like that much attention to the education side. So there really is there's tons and tons of details around for those who are looking for it. Look, great takes. Again, 35 minutes in, so I want to make sure we can get into some of the Flare details as well where we can. Next big question for me around Flare is honestly just around those opportunities, Thanos. So you spoke about XRP a second ago. Are there any other opportunities, or if you want to expand on that opportunity in the Flare ecosystem, that you're most excited about?
Yeah, for sure. So I think the opportunities that are most exciting are for XRP, for Flare, and for stables. I'd say those are like the 3 assets that we are mostly focused on for integrating into our DeFi ecosystem. Um, in terms of opportunities today, I think depositing stables on Kinetic is a pretty good deal. I think S Flare or Flare drops by holding W Flare is yields decently well. Obviously, none of this is financial advice. And then on XRP, which should be hopefully coming soon, I think that there's going to be a bunch of strategies available, and there should be strategies available for like all of these specific assets that we are focusing on. Um, so yeah, like I would say like take a look around, check out SparkDEX in terms of LPing, check out Kinetic, check out like a few of the other a few of the other protocols that we have coming out that I think are going to be decently interesting. Like we're taking a look at some PTYT trading apps, so yield trading apps that Juan alluded to, and we're also taking a look at some CDP, so a collateral debt position, which essentially allows you to borrow against Flare or XRP, and then there's we're taking a look at like a modular lending protocol. But I think in terms of today, we're still pretty early in terms of where our DeFi ecosystem sits, and I think that like the opportunity set is only going to continue to grow.
Yeah, again, great context here, and I'm glad that we can like highlight a project like Flare to sort of expand and give context for the show and the discussion we're having today. And also, yeah, I think Thanos, you've mentioned it every time you've come on the mic, which is very appreciated. But for the listeners, of course, none of this show is financial advice. You would have to be like locally qualified to provide financial advice. So I hope you guys are aware of that. But for the most part, this is industry experts who are passionate about the industry they're building in, providing you the information that they have learned through that experience. It's not financial advice. I know you guys are probably aware of this, but just in case you haven't caught that two-time update from Thanos, I just want to triple click on that one. We've talked a little bit about education, and Alexei, maybe come over to you as you highlighted that is, a major point to push the space forward. One area on education where I still think there's a huge misunderstanding is around volatility, and especially for people coming into the space. I think volatility just is looked at as a huge negative. That definitely, it does have consequences, and those consequences can be negative, but there's also another side to this as well. So I would love to throw the mic over to you, and could you give us a little guidance, or just from your experience, how you look at volatility, how it hurts pools returns, for example, but also, the positives that it opens up trading and, hedging plays and so, some of the other things that volatility can open up in this industry.
Yeah, absolutely. Look, there's a lot of different areas to touch on here. So, look, I can understand people being scared about volatility. It definitely is a scary thing to be going through. Obviously, in Web3, in crypto, one of the most volatile markets, in the space. But again, it's aging with maturity. Those swings, they are tending to soften from 100%, move up and down. We're going to 60, 40%. So it's both a pro and a con. It can open up a lot of different opportunities. So, one thing obviously with volatility is it's a trader's best friend. So if you're a trader, personally, I'm not. I've tried my hand at it a few times. I absolutely suck. I've learned the hard way to kind of stay away from it. Obviously volatility is a trader's best friend, so you can take advantage of those. If you're somebody like me that just DCAs into the market on those down days, I buy. On up days, sure, sometimes you can take a bit of profit. With volatility as well, it can open up a whole bunch of different hedging opportunities, and that can bring us back into yield, where you can use, as an example, you might create an LP on a certain DEX that's getting a little bit more advanced, and it might open up an LP on a DEX, and you can hedge the impermanent loss or impermanent gain on a perpetual platform. With volatility as well, you can farm the different funding rates between different derivative platforms. Obviously, with volatility as well, that brings in more volume. These are all more advanced strategies, so definitely go do your homework before you try any of these out. I'm sure there'll be curated vaults that will be coming out with different strategies that can take advantage of volatile days and trends in the market. But yeah, definitely something to go do your homework with. It's something that I think the people that have been in this space for at least the last couple of years would have learned the hard way that it's scary, but it's also your friend, and it opens up many doors of opportunity in different areas.
Absolutely, yeah. Look, great take, and I think a couple of us, and myself included, will feel a little seen by the trying to get your hand in trading. It looks really attractive, and then just absolutely getting wrecked on that. I would say anyone who's getting involved in that, please play small bets first. I think if I can pass on one lesson for myself, that's one thing. If you are going to play around with your own finances, don't just assume because you've had a couple of good ghost trades that you can just throw it all on black. The market will not treat you well on that. Okay, that's one side of the volatility. Actually, both sides of the volatility. In terms of the challenges it provides, Juan, can you give us any context on stories that would help adapt strategies for those more volatile markets that crypto can produce?
Yeah, absolutely, Jack. So I think that when taking into account volatility, we need to understand in which regime of the market we are, right? I think that the strategies that are suited for bull markets might be a little bit different than the ones for for bear markets. So to put some practical examples with some of the two key primitives that there are on DeFi, which are lending protocols and perps. With lending protocols, we often see that many users deposit their crypto collateral and borrow stablecoins, and they need to manage the health of that loan, usually setting a loan to value that is conservative. This, for those that don't know, is the value of the borrower versus the collateral. So in bull markets, usually this risk parameter can be a little bit more, a little bit higher, a little bit more aggressive, since the probability of a large price drop on the collateral token that you have deposited is lower. So the chances of a sudden liquidation is minimized. While in bear markets, probably this LTV could be a little bit more conservative to try to stay away as much as possible from liquidation. Uh, Still, managing these loans is demanding. One needs to have careful monitoring over those. So it's always better that users start with small amounts and they understand all the mechanics, which at the beginning are not easy. And it happens something similar with perpetuals, right? There is a popular trade in the last couple of years, predominantly through Ethena, which is basis trading, which means to buy the spot asset and short it on perpetuals to earn the funding rate. So we have seen that in bull markets, the returns for this strategy can be large, like 10 to 20% on stable coins. But it's very common that in prolonged bear markets, these yields might turn negative. So I would say that DeFi users need to be mindful of what's the current state of the market to try to adjust on the risk side as much as they can. But of course, as we mentioned, it's a learning experience, and it takes some time to fully master these ones.
Absolutely, yeah. I think it's nearly 6 years for me, and I'm still learning those lessons the hard way. So yeah, great take, Juan, and really appreciate the insights there. I guess we're talking about management of risk. We're talking about volatility. There is always context in terms of where the market currently is at. The bull market, a bear market, and how that impacts volatility and how it impacts the DeFi ecosystem as a whole. Obviously, has a huge role to play in it. Where and speakers, this is open. I'll throw it over to Thanos to begin with, but would love to hear any additional thoughts on this one from everyone. Where do you think the market is at now? Like, are we in a bull market? Are we in a bear market? Is it sort of an unknown right now? Which way is it leading? Obviously, there's stuff going on globally in terms of economics that is giving us some insights right now. But Thanos, I'd love to hear your thoughts on this.
Yeah, so where are we in the cycle is, I think, a question a lot of people always ask themselves in crypto, because if you've been around the block, uh, you've you've witnessed 80% drawdowns numerous times in your portfolio just over the course of like the last I don't know, like 10 years in crypto. And so, like, I think crypto in general has become way more institutionalized than it ever has been. The dream in 2017 was is that Bitcoin was held uh, by every single Fortune 500 company, because it truly was the hedge against the dollar, and I think that's starting to become somewhat true. If you look at Figma, they had a bunch of Bitcoin on their balance sheet, which is a very recent IPO, right? Um, and so I think that crypto as a whole and the entirety of the market actually will start to move pretty much in lockstep with larger markets like the S&P and the Qs and the Nasdaq, um so the Qs is the Nasdaq, sorry, and then we'll pretty much just move in lockstep with most of these larger markets. Usually what the North Star is seeing what the cost of capital is. So when you're pricing risk or risk adjusted returns, the number one thing you look at is like, what is my risk-free rate, which generally is priced in the 10-year notes of the government, which is directly affected by what the Fed does with their interest rates, right? So if you tuned into the last FOMC, which was literally yesterday, they delivered a 25 basis point cut, which means the 10 year is going to start to come down, mortgage rates start to come down, interest rates start to come down. And they also gave guidance for another 50 basis points this year. I was expecting 50 basis points total in cuts this year. They gave guidance for another 50 this year, so in total 75, which generally means that like risk is going to start to go on a little bit more here. So my personal take is that we aren't at the end of the cycle, and that in general all markets are primed to head up, especially with these interest rate cuts coming in. Um, so yeah, I don't know. That's generally where I sit right now. Like I think that I would want more chips on the table now than before, but that's just my personal take. Obviously, markets can go anywhere. At any given moment with catastrophic events, as you've seen with 2008 and COVID. So there's never a right answer to this, but for me, I think that with the cost of capital coming down, it's definitely worth being in the markets.
Yeah, right, and that's just generally where investments and especially when it comes to the US, institutions tend to follow that pattern. You know, when money's cheaper, they go more risk on. So do businesses. That's where the growth comes from. You know, if the money itself is easier to access, then of course that's the prime opportunity to invest in growth, because it's just cheaper to do, and it gives you more leeway as well. Whilst obviously when it's more costly, then the opposite is true, and you want to have more liquid on your bank sheet. So great takes there, Thanos. Really appreciate the context. Juan is coming with the hand raise as well, so would love to hear your thoughts on this one.
Yeah, thanks, Jack. Awesome take by Thanos. I completely agree, and I wanted to touch down on this concept of this cycle being the distributional cycle, right? We are seeing how DeFi TVL is near all-time high. Same for the global crypto market cap. ETF inflows for BTC and ETH are constant and positive. Digital asset treasury holdings as well, they are increasing and increasing every day. There is a boom as well on DeFi with credit lending markets. Risk taking is dominating in TVL as well. Also, the volume on perpetuals is holding very, very strong. New primitives like yield markets, like Pendle or Spectra, continues to be strong. So, yeah, I think that what's next that we could see at some point in this bull market will be an increase of the retail adoption on DeFi. Probably it's going to be hard to expect something like the 2021 mania, right? But I think that we might see a comeback, moreover after the micro shift that the shift that Thanos mentioned. So yeah, I think that there are also advances in integrations to remove the capital friction that retail have, which currently many of them are just holding on centralized exchanges. And we are seeing integration of centralized exchange wallets or DEX wallets into DeFi products that for sure is going to remove that friction to port capital into DeFi.
Great takes again, and yeah, really appreciate all the insights from our speakers here. And look, we're getting really close to the end of the show, so I'd love to throw the mic over to Alexi, and then I'd love some parting closing words from each of our speakers about the projects you have, and basically any updates or milestones you'd like to share with our audience before we close out. Alexi, mic over to you for your final thoughts, and then if you want to take first shot at letting us know a little bit about the project and any updates and milestones, please feel free to do that now as well.
Sure thing. I'll try to be quick then. I think what both the previous speakers said there was bang on. So not much to add to that. The only thing I would add is that no one knows exactly, obviously, where we are, with this current market cycle. What I would just say to everybody out there is position yourselves safely. Just make sure that any capital you have deployed in a worst case situation is not going to completely wipe you out. If the market does downturn, You can storm the bad times, and you're not leaving yourself, your family in a bad position. So you still got money on the side to just pay for your everyday expenses. Don't be crazy like I was in the early days when I first got into DeFi in 2018 and essentially chucked in everything I had. So I learned the hard way. So just don't repeat that mistake. So any capital you guys are deploying in the markets, just please be safe out there. Don't do any crazy trades, and just educate yourself. I think that's the number one thing. Just try and learn as much as possible. And you will make mistakes out there, and that's the price of the education in this space. So going over to Flare with SparkDEX, so the primary product that we have deployed is a Uni V3 forks. We're the number one DEX so far on Flare. What we're looking to do is essentially become a complete DeFi hub. And this will be done through various integrations with different partners throughout the ecosystem as well. So we'll be integrating curated strategies and vaults. We'll be integrating lending markets onto our front end as well. And some of the next milestones that I'm personally really looking forward to is three key things. One, we'll be deploying a V4 DEX in the coming few months. We'll be looking to deploy a Club DEX as well, which is a central limit order book DEX, fully on chain. So essentially we have like a centralized exchange experience on chain. So imagine you're trading like a Binance feeling, but in a decentralized way on chain. And the third thing that I'm really looking forward to, and we're putting a lot of resources behind right now, is making the V4 DEX that will deploy more capital efficient. And one of the ways that we're looking to do that is by getting LPs on the DEX accepted as collateral into lending markets. So imagine you can still create like an LP position on a DEX, you're still yield farming, then you can take that, deposit that into a lending market, and as an example, borrow some additional stable coins and go bring yourself an additional yield in a delta neutral way.
Love that, Alexi, and really, really appreciate those final thoughts as well. In terms of just money you can lose is generally the the investment thesis here, and at least just making sure you're safe with the fundamentals when it comes to costs and learning in this space. I did similar. I went all in. I started learning about Bitcoin, about Ethereum, and DeFi, and was just like, oh my god, this is the once in a generation access point here. I'm just going all in, and that. If I had held a little bit more fiat, held a little bit more in stables, like I could have took some huge opportunities when Bitcoin then hit 13,000 and Ethereum was, sub 1K, I think, at a certain point. So definitely take that with a pinch of salt. Always just understand that it might feel like your last opportunity. It never is. There's always going to be another opportunity to get access to these assets in some which way. Okay, let's get the mic over to Juan, and then we'll finish off with Thanos here. Juan, any final thoughts from you? Any updates, milestones you'd like to share on behalf of Centaura today before we close out?
Yeah. So for me, I think that the one that I'm more excited about is Firelight, which is the upcoming project incubated by Centaura. So this idea of bringing a new primitive to the Flare ecosystem that is going to unlock all of that stagnant capital of other chains, starting with XRP, something extremely exciting, right? Furthermore, the integration that Firelight is going to have with the whole Flare ecosystem is going to be very interesting, right? So the integration of its LSD into different DeFi protocols to earn even more yield, I think that will be extremely appealing for those XRP holders that currently are not earning any yields with their holding in certain exchanges or in their wallets. So I will encourage anyone interested into it to head over to the website, firelight.finance, join the Firelight Discord, and follow along for the upcoming updates.
Perfect. Thanks, Juan. And Thanos, over to you for your final thoughts on the space. Any updates, milestones that you'd like to share on behalf of Flare today?
I personally am barred from doing announcements by myself. I usually leave it to our marketing team. But I'm very excited about what we're working up towards, which is FXRP. And then I think Firelight is really going to be like the cornerstone protocol of Flare. people are coming to Flare to earn yield on their XRP. Firelight is really going to be that first step where you deposit FXRP, you get staked XRP, and then you can go use staked XRP in a bunch of different protocols as collateral, right? There's also going to be an FXRP staked XRP pool on SparkDEX, which won't have any impermanent loss, and you can earn yield for providing liquidity there as well. But more importantly, I think I think we've been working a long time to get to this moment, and I think we're getting closer and closer, and I think the community should be excited to start using the products that we're building, and the journey doesn't really stop here for us. Once FXRP goes live, the question goes from when FXRP to when 1 billion in TVL, right? So it's really like for me, it's going to be working on distribution partners, getting some of the larger exchanges and pockets of XRP in play to be able to get deposited into Flare. How can we build products to make it easiest for people? So Firelight, like DeFi, etc., like FXRP, I'm feeling very good about, and now I'm kind of turning my focus to distribution. So if you know people that hold XRP and want to unlock it, I'm obviously happy to have a conversation with them.
Awesome stuff, Thanos. Yeah, appreciate allowing the marketing team to do their job there, as I'm sure they all just took a sigh of relief. I always know some founders and builders are like, hey, wait, what can I say? What can't I say? So I appreciate all the takes today. Massive shout out to Thanos, Juan, and Alexi for your time. Big shout out to Firelight for putting this show together in partnership with Centaura today, and massive shout out to the audience who've tuned in. I hope you guys enjoyed it. Hope you got a ton of information that you might have needed, and we'll catch you on the next show.
Thanks, guys.
Thank you.
Well, guys, there we have it. That was the space. Did go on for about 1 hour. I'm not sure. I thought it was a good discussion, but we didn't get no particularly new insights. We did hear that SparkDEX is planning to launch a V4 exchange, which is basically Uniswap V3, but the addition of, what do they call them? It's not hooks, it's something else, but little bits of, I guess, programming packages that you can apply to liquidity pools to add additional functionality. They also want to improve the efficiency of the decentralized exchanges by allowing the LP token, the liquidity provider token, to be used as collateral, and also the fact that they are looking to launch a club exchange or a central limit order book exchange. So something that you might be familiar with on a centralized exchange, maybe like Binance or Coinbase, for example. Yeah, that's it, guys. Not really much to say from that. Like I said, no new alpha there to report, but it is what it is. I still enjoyed the conversation, and just to reiterate what some of the guys were talking about there, especially for those who are new to the space, don't ever go all in. Don't jump or don't test the depth of the puddle with both feet, right? If you are just starting out here, please take it step by step and don't rush into things, because this market is very nascent. The Flare token and the Flare ecosystem is still very young, and we've still got all of the growth to look forward to. So with that out of the way, happy Friday, guys. I do appreciate you all so much for watching. Please feel free to like and subscribe if you have not already done so. Do take care, have a great weekend, and until next time, I'm out.
We have liftoff.